Good morning. Welcome to the Meet the Masters of Insurance webinar series. I'm Lawrence Geller, the founder of Four Advisors Only. This is the 26th of what we expect to be a great many webinars with Canadians who have dedicated their careers to learning the art and science of insurance sales and service. Webinars in this series are now scheduled through the end of this year, and more are being added to the schedule daily. Over the years, I've observed that every successful insurance agent who I've met has succeeded differently, even if they're in the same field, deal with similar clients, and even if they're related or in business together. It's possible to become a success in our business with diligence, integrity, and experience. With this webinar series, we intend to prove that any type of person can succeed with time and hard, thoughtful work. Our goal is to create a video record for each of these masters of insurance so that some of their experience and expertise will be available to anyone who'd like to learn from them. Today, we have Gord M. Cowan with us. Gord is a trailblazer in the insurance industry, celebrated for his transformational approach and visionary leadership. As the founder and CEO of the GPS Consulting Group and Insurance Agencies Inc., he has dedicated over 4 decades to redefining life, health, and group employee benefits. His company is renowned for its client-centric ethos, comprehensive insurance solutions, and innovative strategies that challenge the status quo. Gordon is considered a disruptor in the industry. He's known for his refusal to accept conventional norms. His mandate is to empower clients to make informed business decisions, tailored to their unique needs, rather than being constrained by vendors' predefined functions and capabilities. This client-first philosophy has positioned the GPS Consulting Group as a leader in delivering tailor-made insurance solutions. At the core of Gordon's approach is comprehensive risk management that extends beyond their organization to encompass the needs of owners, executives, and employees. He meticulously aligns client requirements with providers capable of delivering optimal solutions. Often, this involves integrated multiple providers under a seamless single administration platform, ensuring clients benefit from best-in-breed providers and solutions. For Gordon, best-in-breed does not simply mean the best price or technology. It signifies selecting vendors who can meet the specific requirements of each client's insurance program. Gordon's professional journey has been marked by his relentless pursuit of excellence and innovation. His ability to inspire teams, foster collaboration, and implement cutting-edge solutions has driven significant business growth and client satisfaction. Beyond his professional achievements, Gordon is also recognized for his philanthropic efforts, dedicating time and resources to various charitable organizations and initiatives that make a positive impact on society. Let me tell you on a personal note, while that might have been quite a mouthful, it's all very, very true of Gord. He really is all of those things. Gord's contribution to the insurance industry, his unwavering commitment to both his clients and the community, underscores his legacy as a transformative leader and compassionate philanthropist. Dave Patriarch will be interviewing Gord. We've now booked webinar interviews through December of 2024, and we're adding dates for 2025 now. Thank you very much for joining us, and over to you, Dave.
Thank you very much for the introduction, Lawrence, and welcome, Gord. Let's just get right into it. So, Gord, you and I have kind of known each other maybe 15, 20 years through different people connecting us. And but until we kind of started preparing for this, I didn't know a lot about your background. And we're just going to get right into it from the beginning of how did you get into this business? I know most people were woke up as little boys and girls and said, hey, when I grow up, I want to be an insurance agent and sell group insurance or life insurance. But I find that that's tends to be pretty rare. So what brought you here?
Well, thanks, Dave, and thanks, Lawrence, for the introduction. Truly appreciate it. what brought me into the insurance business was probably similar to others. It was never my focus to come into the business. It happened that I was in between jobs, and I had a young family, and I was approached by an insurance agent at that time with Metropolitan Life, and he did his darndest to convince me why I needed insurance. And it was in the individual side, but I was able to convince him that I did not need the insurance. Later on, I learned he was the top salesman in Canada for Metropolitan Life for a number of years. And he subsequently called me about 2 days later to say, Gord, you had a hell of a lot of good objections. I still think you need insurance, but I think you should come in and talk to my general sales manager. So my career began in June 1st, 1978, and I've been in the insurance business ever since.
So when you started, were you a generalist, a specialist? How did you pick and choose? MetLife is no more. They are still a thing in the US, but in Canada they were merged out long ago and stuff. But how did you pick, and what helped you drive that?
Well, there's nothing to pick from other than the fact they presented themselves, their ideals, the family environment that Metropolitan Life portrayed, convinced me. Plus, it did help that they offered me a guaranteed income for 6 months to get going. So, and then they offered me a book of business of old clientele. When I say old, I had clients that were paying 5 cents a month for their insurance, so I could leverage that. So all of that said, hey, let's give it a shot. And that's how they did it. And after 6 months, I'm looking back, way too young, but I was given my own sales unit. So I was in charge of about 8 different agents, and I recruited another 14 over about a year and a half. So.
And this was mainly in individual insurance, life,
Yeah.
living benefits?
Matter of fact, I wish it was only life insurance. We had living benefits. The only thing around at that time was disability. And Metropolitan Life said, don't worry about that. We don't sell it. So, yeah.
So then how'd you make this shift from just the straight life side to expanding and adding other lines of business and so on?
Well, disability was always my interest because, the ability to pay a premium was paramount to me. And I always talked to them about, the need to consistently pay this premium or it's going to lapse. So that always engaged discussions of how do you get paid if you're not at work. And so I kept pushing Metropolitan Life to allow me, which they did not do at that time. So I sourced out other ways of being able to handle that. And then after a little while, I realized disability was very difficult conversation with quote unquote employees. So I started to look at business opportunities, and it helped that my wife was telling me, you got to get out of the business, Gord. We don't see you. You start at 7 in the morning and go to midnight. So in a matter of a very, very short period of time, I changed my moon glasses to sunglasses and got into the business insurance world.
So let's take one step back. You talked about that business that you were offered and those kind of older leftover clients. But how did you end up making cold calls? How did you start to grow the individual side before you got into the business side? And how did that change once you got on the business side?
I'm sorry if I understood your question. How did I manage prospecting before I got into the business side? Okay, well, back in the day, there was various lists you could buy. I invested in lists. TILA lists were the mortgage listings, baby welcome wagon, all of those things were around at that time. But I really cut my teeth on how to be rejected by going door to door. So I did a lot of door knocking in new communities, and always interested me that 6 of us would take one large community in Port Credit that was fairly new. I would go through it one week and I'd pick up 2 sales, and everybody after me would pick up 2 sales. So it was a very interesting way to understand why people bought, what you did or did not correctly or not. So that's how I did it the hard way, and then picked up the yellow pages. because we were managed towards activity. And the activity was the old, again, I'm dating myself, Branham method, where you had to make 100 calls a day, blah, 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 blah. Even if you got 98 rejections, expect 2 good ones. And that's the formulas we were held to.
And that holds true today, whether you're knocking on doors, whether you're making phone calls or emails, or we still have groups that do mailings to businesses and so on. So you started to transition into the business side of things and group insurance. And how'd you kind of continue that? So did you kind of take that door knocking and move it into the business side of things as well and continue knocking doors, or how did that evolve?
Well, a lot of people know me. I'm a very impatient person. I'm also impatient with myself, not just vendors and clients. So I realized that if I really wanted to get into the business insurance world, I had to pay for my education. And what I mean by that is I engaged with a leader in the group benefits at that point in where I worked, and I paid him by opening doors. He would come in and close them, and I gave the majority of my revenue to him. So that's how I paid for it. And in calculation, 5 years later, I think that education cost me in the 6 figures because of the kind of accounts that I did. From there, I took it to door knocking. I did the old London Life Plaza patrols, and except I wouldn't take a manager with me and 5 other salespeople. I did it on my own, and that's how I started in the business insurance.
Did you have a target market, or what did you use kind of as your guide? Was it, any business door you knocked on was good, or did you try and stay white collar, blue collar, or no?
No, it was anybody that had a sign on the door, and I walked in, and then from there I just opened up a discussion. At the time, the hot benefit was how you paying your health and dental benefits, but it always transcended into conversations around disability and so on. As the owner of the firms, they typically were smaller companies because I cut my teeth there. Because I was on my own, I let the other prior relationship where I brought in companies at that time in the 70s of 150 employees. I had no idea what I was doing. So I was more comfortable starting in the smaller market. And it opened up a lot of individual sales, not just group benefits. So
Fantastic. So then as time went on, did you very quickly get rid of kind of most of the individual stuff, and the only individual business was business individual, like owners buy, sell, and that kind of thing? Did you keep
that's
pursuing it,
exactly.
or yeah?
The only time I dealt with individual business outside of business was for families, friends, and referrals from a business client. I didn't actively market in that business. So
Fair enough. So how did you recognize what was a good lead versus a bad, like, or a good door knocking? I mean, it's never as simple as yes, I'll buy, or no, I won't buy. There's something you take some time on and invest in and educate, and you kind of see them. So what kind of questions would you ask, or what would you be looking for as a good positive, response to a door knock or phone call or whatever?
yeah, I guess I opened up the conversation and just asking how they got started in business. I asked them to talk about themselves, and with every one of those probes would come back a response that I would either further the conversation about. But eventually I got to where I wanted to be, and that is, do you have employees, and how important are they to their business? And how do you feel about Johnny if he walks out tomorrow versus Sally? And so getting their mind going down the road is, are they key? Are they not key? And, if you were having to bid again for these people, how do you want to do that? How do you want to keep them? How do you want to retain them? That's really what it's about. And then because I was in the small business, it was more family oriented. I said, most importantly, if Johnny got in a car accident outside of work, not outside of workers' comp, and they couldn't deliver an income to their family, what would you do? Well, it's not my problem, would be the response. I said, no. But just knowing them, I said, what would you do? I said, would you cut him a check for something? Yeah, I would. I said, okay, so let's talk about how you can do that, in a proper manner, and take the risk away from you. So that's how I did it.
And those good kind of questions that make people think, I mean, are as valid today as they were then.
Absolutely.
And we still see that of, what happens when an employee walks in and says, I need a $500,000 drug, or my child needs a $50,000 chemo drug, or disability, or whatever the case may be.
Right.
Do you think it's changed? One of the things I hear from new advisors all the time is, "Oh, you guys all had it easy. The world was your oyster, and it wasn't a big problem. Clients just walked in the door. But it's a whole lot harder for me because people aren't always in the office. They're working remotely. They're harder to get a hold of, and so on and so on." But do you think you can do all the same things, whether that's knocking on doors, picking up calls, and overall building a good benefits business or insurance business in general?
Uh, I don't think the messaging has changed. It's how do you access it? What's your ability to communicate it? And really, the message is the same. It's where do you engage these people? And I'm going to suggest to you, door knocking is not what it used to be. But you've got the power of the internet now. So you got to be able to articulate your value proposition. And honestly, it's not sales, it's thought leadership. Because if you can engage with them on a thought leadership from a thought leadership perspective, then you're really telling them about why they need to consider things without saying, and by the way, I've got this solution for you. So get yourself out there, make people aware of how you approach those risks areas. I categorize everything into risk because that's what it is. It's risk, whether it's risk to a family, a business, shareholders, whatever. It's all about risk. They never take time to, especially an entrepreneur, never look at it from their perspective. They think of it from their employees, maybe from their clients, but it's they never think about themselves. And so I make it about them. I said, and I use the analogy of the airplane oxygen dropping out of the ceiling. What's the message? Well, you got to put yours on first. You got to make sure you're well, your risk covered, so you can help other people. And you can't do that if you're not here. So that's kind of the message I get there.
Yeah, and one of the things it was in the introduction, I think, a bit, was you have never been a product salesperson. You've been a solutions kind of finder. So, asking those leading questions, trying to find pain points, trying to find risk, and then kind of try and eliminate or reduce those problems along the way. So that took you a little bit away from the traditional insurers and kind of created some new opportunities. You want to talk about that for a minute?
Yeah, well, again, I think if I was to give any advice as an individual trying to get into the business or is in the business is struggling and trying to grow, clearly understand yourself first. What are your objectives? Get comfortable with what you are good at, what you want to be doing. There's things you can do to make money, but it's really not your DNA. If you're in it for the long term, then you make decisions for the long term. If you don't think you're going to be in the business, you're not going to sell accordingly. So yeah, the questions are, what's important to the client? I sold a lot of standalone healthcare spending accounts to start. Okay, what did I make on it? Well, I believe I lost money in the first 3 years of the relationship, but they came back and I was able to do that. So that's a long-term perspective. So make it them first, you second, and vendors third. That's the way I look at it.
Great advice. I remember being given that to me by Barry Noble at Manulife, who was VP of Group, and saying, if you put your clients first, you'll never have a shortage of clients. Just remember that. Forget about the paycheck. Forget about bonuses. Forget about, trips. Just worry about the client, and you'll be good. So you started working with TPAs and doing your own kind of TPA work and bringing together different solutions that kind of weren't off the shelf. Maybe talk a little bit about, trying to make the right fit for the right client at the right time type of
Yeah.
thing.
So as I started to realize there were specialty providers out there, like at that time it was AD&D was the big specialty provider. Down to that level, there was an organization in Toronto along the West Mall that dealt with large companies, and I got a hold of some of their proposals, and inevitably everyone made a big issue of AD&D. Okay, and because traditional providers even today charge 7 cents a thousand, and he could provide a specialty AD&D product at 2 cents. And by the way, I found out later he's getting 25% comp. So that sort of intrigued me to understand it. And his value proposition was dead on. Why would you buy a traditional AD&D provider when you can have specialty? Because it covered a much broader, larger multiple and so on. I started doing that, and then I ran into the issue of administration. Okay, and sometimes my clients would have 2 or 3 products, and then it got to be cumbersome. So now I had to find out a solution about that. So I found a TPA in Edmonton, and they're still around. They're a union TPA. Promised me they could do corporate, totally different mindset. But having said that, it opened that door to put them onto a single platform. This is before the technology where it is today. Even that was cumbersome. So then I got introduced to some major TPAs and that were used to handling corporate accounts, large corporate accounts, and for reasonable fees and the ability to administrate appropriately. They weren't necessarily claims-paying TPAs sometimes. Sometimes at that point, they were just, I'm going to say, an administrative platform.
Consolidating billings and
That's
enrollments and
Yeah.
terminations and things like that. Yep.
And I'll be honest with you, at the end of the day, that was important to clients because I could bring as many products and solutions to them as long as they only had to input once, or that was the goal. Okay. And they understood that there's still frustrations, but at the end of the year, it was up to me to show them where they got the value, the continuing value from that single platform. So.
Yeah, and I mean, I think that still holds true today. Although, like you said, the technology's improved a lot. I think we have 23 insurance companies that are in that kind of health and dental group space. We have well over 100 third-party administrators, TPAs out there. Some are regional, some are national, some are very focused, like you said, HSAs and so on, and some do a little bit of everything. So I totally agree because whenever I do audits on prospective clients that have multiple administration points, they're doing health and dental here and life and disability there, the lists never match. So that reduced risk and everything else as well, which was brilliant. So what did your focus change as far as what opportunities you were going after? You started out in small business where you were comfortable, where it's maybe easier. I don't know if it's easier or not, but you kind of started to move your way up market from there as well.
Yeah, it was a natural progression to go up market. I was like every other agent. Geez, I need a couple of whales. I need this. Until you realize that the whales can sometimes might produce 25% of your revenue, but take up 80% of your time. And the risk is, of course, anybody that in my ratios were if anybody representing more than 15% of your annual compensation, you are at risk. Because at that point, you lose that, you may have to lay off staff and so on. So these are just my own internal. I didn't have a model to go from. But no, to the last day, I would take a 5-life account. And the reason is, I guess my story of example is I met a husband and wife, and he was in the environmental consulting business. I started off with a 2-person group with Empire Life. They were the only ones at the time that would take a 2-person life. I grew with them, and over a very short period of time, they were about 80 employees. But more importantly, I put in probably about $400,000 of premium on the individual side. And they grew to be a friend, as well as they sold the business, got into another one, brought me with them. So I never say no to a 5-employee group, but they don't require the same sophistication you do in a larger group. Yeah. But they still get the same touch, meaning 4 times a year, but just in a different way.
I would say that that has evolved. I think small business, dealing with things like high cost drug claims, kind of need more advice than they used to. The plans used to protect them pretty well. Off the shelf worked okay for, a fair amount of people, but as time has evolved, not so much anymore. Um, so let's shift gears a little bit. How'd you learn? And what's your thoughts around education and teaching yourself and the people you work with? Just how'd you pick up the technical skills and all that type of stuff along this path?
I learned the hard way. I made a lot of mistakes. That's exactly how I learned. I lost some accounts over the years because of the mistakes I made. Um, one key one that's more known today, and in the last 8 years or 10 years, it's always been in my renewal reports. But I'll give you the example. I learned that when somebody goes off on workers' comp, you had to report it to the LTD provider.
Yeah.
I lost 125 life case on that because I was ignorant at the time. So I've learned most of what I've learned from my mistakes. Having said that, attending webinars and seminars, and actually more out of the advisor groups that are around that share ideas, because you get to understand not only that you're not alone, but you hear what they've done and their mistakes. So I'm more about that rather than picking up a book. I don't think you can pick up a book other than for licensing in our business.
And
So,
and most of that information's out of date by the time the book comes out. So
and
did
align yourself with
yeah.
mentors in the business, because honestly, it's a lonely business. You got to be able to use them as sounding boards. So,
And so let's jump into that one a little bit. So how would you find your mentors, or how did you find, like, did you ever have a study group that you stuck with, like a small group, or where you kind of just would go around wherever there was good information, good people? And how would you make those choices?
uh, no, I did not have a formal study group, but the most value I've got, I've been out of the breakfast meetings that I've been invited to. Some that you started up, Dave, yourself, and you have continued on with the likes of Lindsay and Mr. Waddell, and continues on even now. And you know what? Every meeting you walk out with something, a tidbit. How's that? You walk out with a tidbit, and so that's how you do it. After a while, after you've been matured in the industry, I don't accept the fact I know everything, but
No.
I'm learning every day. Okay.
It's hard not to, because I mean, there's so much changing. I mean, on top of regulation and legislation and taxation, products, and just the market itself. Talked about drugs earlier. New drugs is a constantly changing
Well, and I'll give
space.
you another example.
Yeah.
Rob Crowder, and I see he's in attendance. So Rob, you gave me one comment to make, and I use it today in another area. And I've learned not to waste time. And I say to myself internally, next,
Yeah.
because if they don't take my advice, that's fine. I just help them understand that they need somebody else to advise them, and I go next. And Rob, these are small things. That's what I mean by tidbits. But that's probably saved me money or saved me time, which is money. So, yeah.
You know what? They're little things, but they're big things too. Like, I mean, just that next line is great. I use it all the time. We constantly steal from Rob, and every now and then we give him a thanks. So thanks, Rob.
He's got so much to steal, right?
Yeah, yeah, totally. Let's just take it and use it. Um, but I mean, you also sit down and say, the quickest way to move on to the next prospect is get a no from this one. I mean, everyone's kind of going, I want to keep it open. I want to keep talking to them. No, you don't. You want to talk to them if they want to buy. If not, you want to talk to them a year from now when they want to buy, or whatever. But that's great. So as far as mentors, so you have the informal ones, like somebody like Rob, who, gives you a little nugget. Have you had anybody that's been longer term, or have you mentored other people, and how did that kind of come about?
Two parts to that. So my conversations, my mentorship are coming from people outside of the industry. They ground me. They bring me back to center, because I go off on a tangent, as I always do, but they bring me back to how the customer is viewing what I'm talking about. So I use a number of mentors, some board level, some entrepreneurs, and so on. So that's that. As far as mentoring, yeah, I hope I mentor people when I talk to them. You know, when I hear a challenge on the first one, some people say that's an opinionate. I'm being opinionated, and I am. Having said that, it's always given for the right reason. Whether what you do with it is up to you. So yeah, I constantly mentor people. I've had young people approach me, and I've had 3 or 4 sessions with them over a coffee. And yeah, and to be honest with you, I don't know what the outcome is. I've had some positive feedback, but I don't know where they are today with that. So.
Yeah. Some you'll follow for years and they'll stay in touch, and other ones disappear. We're still in an industry where we have fairly high turnover. I use the line all the time of 50% of group insurance cases are sold by advisors who sell 1 a year. And the old numbers would be that we'd have 50% of people leave this business within a year, another 50% within the next year. So there's this constant churn of people doing kind of one-off cases
Yeah.
and never getting better. Yeah.
Well, one of the, I guess the one thing I guess I'm proud of is when I was a sales manager at the age of 23, I brought in 14 people, and I believe 9 are still in the business now. And
That's
I
amazing.
could also say they've succeeded in spite of me, but I was the least there at the beginning to plant the seeds, and you know, they're still in business today, which tells you that yeah, they're happy.
What are your thoughts on the industry overall? Just talking about that. I mean, we've seen lots of people in it a long time. Our median industry age is something like 60 or something, and no one kind of tends to leave too early unless they're really not successful or really hate it. But where do you think things have changed? Kind of where we've been, where we are, where we're going, or is it the same old thing?
Well, I believe that it's the same old thing, but I think the approaches and so on. But I think what has to happen is people coming into the business have to understand what it means to uh, come into the business and what they're going to face first. A lot of them come in blindly. They don't understand it is a business. And you got to approach this business as any other, even though you're not renting space necessarily, you're not investing capital into technology. Your investment is to be able to finance yourself and your family to get to the point where it can pay. And so, in other words, your cash flow is going to become paramount as you build your business. Manage that like you would if you're in the widget or retail business, and then go for it. Again, the theory is if you're stable, then you're going to make the right decisions, the right recommendations based on stability, not out of desperation. So.
And that's a huge one. So kind of budgeting and everything is a big one. We're very lucky that the barriers to entry in our business is relatively low. I mean, like you said, you don't need brick and mortar necessarily. You don't need a huge amount of technology. You got a laptop, a license, and 4 wheels, or maybe a thumb and hitchhike, and you're in business. What would you say is key? I mean, knowing the struggle is tough. Knowing cash flow is going to be a problem. Like, what do you do when you get that one big check? Maybe it's a life insurance one-off payoff, or maybe it's a group policy that's paying 75% up front. Most of the people are quick to buy the new car, a new suit, or whatever the case may be. What would your advice be to those getting at the beginning?
I was very lucky to learn that lesson very early on in my career. In the first 6 months, I achieved all targets and succeeded. And unfortunately, in the ordinary business of Metropolitan London Life Prudential, they would put you up on a pedestal. So I got ahead of myself in my self-confidence. So what I did was I told my manager, "Yeah, I'm taking 2 weeks off because I want to enjoy what I've done." I was a big guy on the street. That 2 weeks turned into about 8 months of issues. And the message is, the checks that you've got today are from activity you got from the last period of time, whether that's 2 years, 1 year, or whatever. So really success is the journey. The money is the goal, is the objective, but unless you are there to do your activity, so never lose your prospecting activities and your learning, because the day you do that, you're going to have a dry period, a very dry period, depends on how long. So,
And for a length of time. I always use the analogy of the funnel where, the marbles are rolling around. Every prospect's a marble rolling around, and people are great at throwing marbles in at the beginning and doing their prospecting. And then all of a sudden, a marble drops out the bottom, and then they run down to the bottom and grab that marble as it lands, and that's a sale. And then they go, oh, wait, look up the tube. Oh, here comes another one. And they sit there and waiting. And then when it stops, all of a sudden you realize the funnel's empty, and it's got to take some time to rebuild that funnel with prospects. So, very cool. Let's talk about personally. Who are you and how do you give back? I find that most of the people I've interviewed or Lawrence has interviewed have been involved in community and everything else. And I know you have been from Rotary to a bunch of other things. Talk about that, your community charitable work, and also how it ties or doesn't tie into the work and business.
I try not to tie in my philanthropic work into the business, whether it's reality or perception. I don't want to be perceived as using it as an opportunity to get business. It's not to say that I haven't got business from that, but it's never been, hi, yeah, I'm Gord Cowan. Yeah, I'm here to make a difference. And by the way, if you need insurance, talk to me. I was involved with a children abuse center in Oakville for 10 years, helped them raise over $500,000 from my efforts. Never once did I approach them. They actually wanted to put up a PowerPoint with my logo. I made them take it all down. They can talk about what I did for them, but not about what I did. I think that's important. It's, at least as I said, it made me happy. Okay. And I needed to enjoy what I was doing. And my enjoyment wasn't in the money aspect. Okay. I've never been a wealthy man, so don't get me wrong. I didn't inherit. I'm not part of that lucky club everybody talks about. But that's where I got my rewards. As far as all the other charity work, I've started up other charities. One was called Oakville Magical Christmas. It was for, believe it or not, that people don't believe there are people in Oakville that require assistance, but it was to make a difference for the families that couldn't afford Christmas. And we actually had 130 kids every year show up with their families, and we fed them and we gave them gifts and we entertained them. We had clowns, everything. So that's the positive of giving back. And then when you do meet people, you do get recognition. Right, you're the guy that, or you ran the race at the Bronte Provincial Park. Yes, that's all. And so you give it from a position of I want to help, not I want to get, and that's what I've done.
And I would say that's the secret, not just to charitable work, community work, but I mean in business as well. I mean, if you're out there trying to educate versus trying to get a sale, the sales happen automatically for sure. So what would you say your best advice to the groups was? Because I know we talked about some of this before. You help them build programs that would be self-sustaining, that would continue on past your day of effort. And I mean, that's similar to what you do in business and marketing and the marbles we talked about. You don't want to just write a check. You want this to make a difference and continue forward. Maybe talk a little bit about that.
So to me, it's about empowerment. You empower the clients with the right information, the right knowledge to make good business decisions, knowing everything that's required to make that business decision, short-term, mid-term, long-term risks, and so on. And then once you understand that, and they understand, and you apply that to what they're looking at, then you go backwards and you build from there. You build the vendor portfolio, you build the services, you build everything from that. That's to me, the key, the starting point. Okay, you don't go in and say, hi, yeah, I'm here to talk to you about a health and dental plan. Maybe they don't need one. You know, yeah, or maybe they don't want one. But so the conversation goes back to them. At some point, it comes around. It does come around, but that's again, you have to have a long-term perspective in this business. And eventually your clients will see you as a resource. So, and when I say resource, I'm not sure there's a lot of tenured people in this meeting. I don't know about them, but after my average tenure was probably now 18 years with every client. And it's only because I haven't been marketing to more. When I sort of scaled back, it was 12 years. And the reason for that is, believe it or not, I didn't talk to them much about insurance anymore. They were calling me, Gord, hey, I need an x-ray. I sent 24 to 35 clients every year to the Buffalo to get like I was their resource.
Yeah, the
And
go-to guy to help out.
that's right, the quarterback, whatever. And that's kind of what it was, what it was. And that's what I was to them. So,
And that makes for, I mean, a way more fun, way more entertaining, way stronger bonded relationship long term. Just before this call, I had a goodbye call with one of my clients I've had for 21 years, and she's retiring and moving up north. So I was just calling to say goodbye. And 2 minutes into the call, she's in tears. We're talking about the things that have happened over the years. People have died, disabilities, different things we've dealt with. And I thanked her, so much for, putting up with me and working with me for 20 years. And she just went, "What are you talking about? Like, I mean, you were our go-to person. Like, we couldn't have done it without you." And that's pretty cool feeling to walk away from. And like I said, you have a lot of long-term clients that are not clients, they're partners, they're friends, they're everything else, which is absolutely amazing. Um, what would you do different today? If you were starting from scratch, so for the people listening in that are just kind of finding their way, would you still kind of go down the business and benefit side of the things? Would you have done anything different?
um, would I've done anything? No, I'm very happy I transitioned into benefits, and believe that, again, uh, I'm a lazy person. Okay. I was in the individual business, and every January 1st, I woke up unemployed. I couldn't live off renewals. So that was the other precipice of me getting into benefits, because every January 1st, I knew what my income was going to be.
You were investing in an annuity that paid off over time.
Absolutely.
Yeah.
And by the way, I converted my business to almost 100% to monthly as earned, because at the end of the day, the decisions I was making and the advice I was given wasn't based on my whale was going to leave me. It was about the monthly revenue, and therefore it made my advice, I think, different in some cases, whereas it wasn't about what I was losing, but the desire to keep them and make them there. So,
Yeah.
Yeah, I wouldn't have changed this benefit business at all. What I would have done is I'm not good at the social aspect of going out on golf and prospecting that way. I probably would have, yeah, done a little more of that. I think my business would have been enhanced by that. But short of that, no. I didn't want to be huge. I didn't
Yeah.
want to be huge. I liked the tightness of the group, what I had, and it was, in my opinion, a substantial business for my size. So
And that's actually an amazing statement in and of itself, is you didn't want to be huge. And we talk to advisors all the time. I do through CGIB and just people you run into at the breakfast meetings and different things. And a lot of people I think have this idea that if you are not growing and massive and hiring people and everything, that you're unsuccessful. Do you think there's still room for that kind of smaller practice that is has a limit? People
I
like
think
me.
I think it's getting better. And I'll be
Why?
honest with you, with the mergers and the acquisitions that are happening, and again, I'm not as close to the street as I used to be, but all I'm hearing is there's no value, there's no service. So who's going to do that? It's not going to be them. It's purely a financial play. It's a stock play. It's a whatever. So, are you going to appeal to everybody? No, no. The personalized approach, tailor making, and so on will only happen with a smaller organizations, in my opinion. Okay, and my advice is stay the course. It's going to get better for you.
You just got to keep throwing those marbles in.
Right.
So if you were talking to somebody new, there's lots of those people that will be listening now and into the future when these are posted. What other, you've said some things, stay the course, budget accordingly. The whole as earned versus getting advances has come up a lot lately, making it easier when people go to sell their practice, making cash flow easier and all that type of stuff. That I think is a great piece of advice. What else would you say to people that are kind of newer, or they've been in the individual or maybe the P&C side, and they're looking at getting into the benefit side of things? Any magic words of wisdom?
Make people aware of what you're doing, where you're going. Make them aware that you're not an expert in that field, but by the same token, you are continuing to strive towards excellence in your knowledge and your ability to serve them. And you know what? All you have to do is ask, because at the end of the day, people say, "Hey, can I get your opinion?" Always free to give their opinion. What if I was to present this to your brother-in-law's company? What do you think? And they would give you an opinion, and eventually, a lot of times they go, "Oh, well, you can talk to me." Okay, so it's really getting your messaging down right, how you want to be perceived, and just start talking to people. I don't care if it's wherever you congregate, aggregate, whatever. That's what it is. Just start talking to people. Right?
And listen. Yeah,
Well, it's all about listening, but that's one
ask
of
all
my.
those questions.
You asked me how I would improve. I
Yeah.
would actually listen more than preach. But anyways,
It's hard for us though. I mean, sometimes you kind of get that pulpit mentality and you kind of go, I know the answer before I even have the question answered. And sometimes you do. I mean, experience does that, but sometimes no, you got to shut up and listen, because it may not be as simple, or it may be simple and you're kind of dealing with a more complicated issue. Um, what else do you want to add as we kind of get towards the last 10 minutes or so of this? How do you think, or what do you think you could add to help somebody newer to the business, or choosing the business?
invest the time in the front end to understand exactly what you're entering. Invest the time in understanding what it's going to take to get you to start into the business, and then if understand what it means to build a book of business if your objective is long term. And what I just said is huge. It's huge because there's no such thing as a template out there, but you can go to people like the Dave Patriarchs, the Lawrence Gellers of the world, and groups. Get involved and start talking to people, and then start to get a vision of what you want to do, how you want to practice. If you do that upfront, you're not going to be floundering 2 years, 3 years out and changing direction as much or as often as what is happening. So yeah.
You just said something that we talked about at the beginning when we were doing the practice the other day about this, about don't be afraid to reach out, ask the questions, ask for a mentor, call. I remember early in my career, the first couple of years, I ran into Lawrence at a seminar, and I would call him with probably the most insane questions at the time, and he always took the time to answer. And I found most people that I've reached out to have done the same, whether you're asking just a simple question, or you want their advice, or you want a little bit of mentorship. Have you found kind of the same thing? Like, is there any reason not to call the CEO of a company or
Well,
whatever?
the point comes down to, so what if they say no? Next, right? Next. So I think that's the message. I was intimidated by. I never got into the business insurance right away because I was intimidated by position. I thought, man, they must put their pants on much differently than me. They're smarter than me. They know more than me. And reality is they don't know anything that I know. That's why they go to third parties to get consulting and assistance. So yeah, I think that's all it is. I think the other key is in this business, some very successful people, the insurance people, are very negative people. Okay. And I think regardless of what they know or how successful they are, surround yourself with positive people. And there's somebody on the call by the name of Lindsay. I mean, I've not heard a negative thing out of her mouth. I tried to give her real things of why she should look at things negatively, but she spins it back around positively. And really, that's refreshing. Whether it's meaningful information or not, you need that positive vibe. Sales, the highs are great and the lows are terrible. As you become more tenured, the highs are higher and the valleys are lower. But have somebody to bring you back to that positive mindset. So
Fantastic. I'm running through all my questions here a little earlier than I thought. Lawrence, do you want to jump in with yeah, there you go. I knew he'd be right there waiting. He always has the 2 or 3 things I should have asked and forgot. What would you like to throw in here?
Thank you, Gord. I love the idea of being put on a monthly retainer. That does give you a much different perspective with the clients. You talked about Peter and plan benefits and the reports.
I didn't say Peter, you did.
I know, I've been around too long. Though that was a very different way of approaching clients. How did that inform what you did?
Well, I think you said it. It was a different way of approaching clients. And it was a huge differentiator at the time, and it's still a huge differentiator now. You're not going in with a can thing. You're showing your attention to detail. Okay. And again, as I cited, the AD&D, he made that a big issue. And the biggest issue was alcohol exclusion. Okay. And back in the roaring 80s, I like to say, let's talk about Barty's in Toronto, where it was the hangout for all the Confederation Life people. If you talk to them about you had an alcohol exclusion, that you would have their attention. But again, that was the key, one of the keys that he did. And then, of course, he developed models that he claimed that can tell the insurance companies what they had to charge. And with that confidence, he would exude that to the clients and say, hey, yeah, we're going to tell the clients what we're going to pay, and we're going to back it up with my analysis. Zoltan Barzo did the same thing all his career. He had a pricing model, and right or wrong, I mean, I don't know of a better prospector in the upper market than Zoltan was. And that's what he did. He says, we'll keep the insurance companies honest. So yeah, it's still applicable today. Not as plentiful, because many people have taken that model and revised it a bit, sophisticated it. But no, I'm going to say he had one of the biggest influence, and yet I didn't like working with them.
Yeah. Hey, you learn from the good and from the bad. I mean, that's the joy of learning, right?
I landed the BIC account, the BIC pen account, because of Peter.
Yeah.
But
you could sign in all 4 colors.
That's right. That's right. So, by the way, if you ever have the opportunity of grabbing other brokers' presentations, it's not that you're going to steal the client. You look at what they're doing. I mean, that's a great learning tool of how, they were with that prior broker before you got them for 10 years,
And it can also add, like we see in the group space, lots of advisors are just sending out the insurance company's renewal with nothing else, which in and of itself is not the end of the world or anything. But where's the value add? Like, are they negotiating? Is it right? Are there non-repeating claims that should be removed? Like, there's so much that you can add to it.
Exactly.
Helps you, any of those algorithms that we developed all those years ago still work. You talked about risk mitigation for your clients. What's your opinion on risk mitigation for an insurance agent?
Or an insurance, sorry,
For an insurance agent, for you.
risk mitigation is, okay, well, risk mitigation is about communicating the risks of decisions, whether you go insured or self-insured, whether you cap a program, whether you do whatever. Okay, every piece of advice you have to do it as if you're going to go to court. In my perspective, you've got to make it from a position of strength and defensibility. Okay. And there, it doesn't matter to me if you don't believe in capping a plan or capping drugs or excluding drugs. That's irrelevant. To me, you're talking to the client about how to mitigate risk, and they make the ultimate decision that suits them once they understand the facts and the reality. So that's how I do it. It's just simply, I don't make the decision. Where you get into the risk is when you make a decision. I'm gonna malign a couple of operations out there where they have what they call preferred brokers. Okay, I'll give you an example of that. I opened up a transport company in Quebec, and they wanted me to come in and review their program. So I asked them for claims experience. Well, the broker was a preferred broker with this large national TPA. I said they wouldn't give them any of their own information. And I said, well, I'm sorry, I represent TPAs too, but you own, it's your information, it's not even mine. So I make the introductions. I'm not a broker that's is fearful of making introductions to the vendors because it's theirs. If I lose the account because of something I did or didn't do, that's on me, but they own the information. So the risk aspect of that is putting them into relationships that can survive you, whether you've left voluntarily or not. It's all about that. I build defensibility into everything I say and recommend.
You've talked
And
twice,
also,
you've talked twice about an informed decision. The client has to be able to make an informed decision.
Correct.
How much information is enough and how much is too much?
If anybody took my renewal reports coming in to grab the business, they could mark it off my renewal report. Okay, I hide nothing from the client, nothing. And therefore they get all the 3-year stats, claims data, analysis in every renewal report. They could take that to an underwriter and say, price this on this. Okay, and that is my confidence that what I'm presenting and the defensibility of my recommendations, but it's my vulnerability if another broker walks in there. But I'm only vulnerable if the client doesn't see value in how I did it.
And what about for a product they don't have? How much is enough and how much is too much information?
Well, I think too much and not enough is relative to the client. Like who's going to determine that? The broker? No, it's your discussion about why they're looking at insurance and what is it they want to accomplish. And the numbers are the numbers. I have clients say, there's no way I need that. I say, well, here's the numbers. Numbers don't lie. Here's the proof. Here's the inflationary, whatever. And by the way, they agree to all of those points. They just don't like the result. I didn't create it. I didn't create the risk before I got here. I just uncovered it, right? So that's it.
It's the client's problem. It's not your problem. And when you leave, if the client does nothing about it, it'll still be the client's problem.
Correct. Correct.
that and have $5 million of E&O coverage just in case.
Absolutely. E&O, and you have to have that protection. But you know what? I look at that insurance as it's almost a 1-year or 2-year coverage, because let me tell you, you have a couple of claims, it's no different than any insurance contract. You're in trouble as an E&O. So again, do the right things for the right reason. Sometimes something will slip up. People's perceptions become a reality in the courts. They don't care about the insurance company, the advisor, they care about the client, as we all know. So therefore, you could have a payout, but make sure you've got everything built in a defensive environment. And defensive simply means you can prove and support your advice.
Do you do a lot of work on the phone?
Do I do a lot of work on the phone? I see clients at the time, some of them I saw quarterly and that. Everything else is done from the office, absolutely.
How do you track what you do?
Do I track what I do? No, but not everybody has somebody behind them with a whip and saying, hey, let's get going. That's a spouse, by the way. It's no, how do I track what I do? I guess I've been at it so long that I don't have a problem filling my schedule. So
But do you have a CRM that tracks calls with clients, communications with clients? Do you record phone calls? Do you like working on that defensibility thought? What do you have behind you?
yeah. No, yes, I do have some CRM capabilities. Do I use the technology till its fullest extent? No, I'm old. I don't want to always learn new technologies, but I think my butts are covered because I do it the old-fashioned way. I actually, old-fashioned today is email and text. But I cover every call, I back it up with a confirmation to them. So.
That's key.
That's perfect. That's exactly what I was looking for. Thank you, Gord, and thank you, David.
Thank you.
Thank you.
Thank you all for joining us today.
Yeah.
Next week, we're taking a week off. The following week, on August 8th, Barrington Gray will be interviewed by Jim Ruda. Following that, Susan St. Amand will be here. And then Mr. Patriarch will be back with Gord Hart. And following that, we'll have Dale Enns visiting with us. So again, we have quite a diverse group in different areas of practice joining us in the month of August.